Hello everyone! In this video, I want to explain a phenomenon that's called sell the news. The concept of selling the news might sound counterintuitive. Wouldn't good news make stock prices rise? While positive announcements can certainly lead to a temporary jump, selling the news describes a scenario where the price dips after the news breaks, even if it's good. Let's jump into the reasons behind this phenomenon. Selling the news is often paired with its counterpart, buy the rumor. This strategy hinges on the idea that stock prices tend to rise in anticipation of positive news. Investors speculate on an upcoming announcement, driving the price up in the days or weeks leading to the reveal. However, once the news is officially released, the market reaction can shift. Here's why. The market is forward-looking. If positive news is widely expected, it's likely already been factored into the stock price. When the news finally arrives, it may not be enough to further propel the price, as it simply confirms what was already anticipated. Profit taking. Investors who bought based on the rumor might see the news as their cue to sell and lock in their profits. This selling pressure can drive the price down after the announcement. Missed expectations. Even good news can disappoint. If the news is positive but falls short of the most optimistic forecast, investors might react negatively, leading to a price drop. Examples of selling the news. Here are a few real-world examples of how selling the news can play out. Earnings reports. A company might beat analyst expectations for quarterly earnings, yet the stock price falls. This could be because the market had priced in a much higher beat, or because investors are concerned about the company's future prospects despite the positive results. Economic data. A strong economic report might initially be met with a positive market reaction. However, if the data is too strong and raises concerns about inflation or interest rate hikes, the market could turn bearish, leading to a sell-off. Mergers and acquisitions. News of a merger or acquisition might be seen as positive for the target company, but the acquiring company's stock could face selling pressure. Investors might be unsure about the integration process or the long-term benefits of the deal. While selling the news can be a frustrating experience for investors hoping for a sustained price increase after positive news, it's not inherently negative. And here's why. Profit opportunity. Savvy investors can use selling the news to their advantage. By recognizing the potential for a price dip, they can short sell the stock before the news is released and potentially profit from the post-announcement decline. Market correction. Selling the news can sometimes act as a healthy market correction. It prevents stocks from becoming overvalued based on hype and speculation. Long-term focus. A short-term price dip doesn't necessarily negate the positive fundamentals of a company. Investors with a long-term perspective can view this as an opportunity to buy quality stocks at a discount. Understanding selling the news can help you make better investment decisions. Here are some tips. Do your research. Don't just buy a stock based on rumors. Analyze the company's fundamentals and understand its future prospects before investing. Manage expectations. Don't expect every positive announcement to lead to a significant price increase. Be realistic about the potential impact of the news. Consider long-term strategy. Focus on the long-term health of the company rather than short-term market fluctuations. If the company has strong fundamentals, a temporary price dip might be a buying opportunity. Diversify your portfolio. Don't put all your eggs in one basket. Spread your investments across different sectors and asset classes to mitigate risk. By understanding selling the news and its implications, you can be better prepared to navigate the ever-changing dynamics of the stock market. Remember, good news doesn't always translate to immediate price increases, but with careful research and a long-term perspective, you can still make sound investment decisions. See you in my next video.